Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I'm excited to be here today with Ryan Donovan, the CEO of the Council of Federal Home Loan Banks. Ryan, how you doing this morning?
Hey, I'm doing great, Mark. Thanks for having me.
You got it. Yeah, we've had you on a couple times. We go back to the CUNA days before America's Credit Unions when you were, the top of the organization over there. And I always enjoy chatting with you. But I thought it'd be good to just kind of say, hey, what's going on with the Federal Home Loan Banks, particularly since last week, the day before the Bank Act turned 94, they had the first oversight hearing in 15 years, and you were able to get the good thoughts out of the organization. So how did that go?
Well, listen, I thought it went great. When I was at CUNA, I prepared probably 60 different people to testify before Congress over 15 years, and it is certainly a much different experience when you're the person behind the table. But we had the opportunity, as you said, it was Federal Home Loan Bank Week, 94th anniversary of the Federal Home Loan Bank Act, and the House Financial Services Committee gave us the opportunity to participate in an oversight hearing and really tell the story about the home loan banks and how we're fulfilling our mission today. And, it's a great story to tell. We've got 11 banks that are serving 6,300 members, credit unions, banks, insurance companies, CDFIs. We're providing liquidity to them so that they can serve their members, customers, and communities. And we're supporting housing affordability. We're not a well-known system, right? You mentioned it was the first oversight hearing in 15 years. So we had a lot of education to do with the members on the subcommittee, and that's where we started in the testimony.
And you triggered something. So all the different players that you can have belong to the Federal Home Loan Banks. I think last time we chatted, I went back and looked at some of the notes. The growth of credit unions was bigger than some of the other players. How has that played out over the last year? Credit unions
Yeah,
still growing robustly?
it's continuing. I think the credit union membership has grown. We've got a substantial portion of the credit union assets. If you look at it by asset size, there's a substantial portion. If you look at by member size, there's still opportunity to grow among the smaller members. But I think across the country and in all the various districts, credit union membership is robust.
That's great. That's good to hear. And when I'm talking to credit unions, it's always a tool in their generally a toolbox, especially the bigger one, just like you say. So it's good to see everybody's embraced it for all it can do for credit union.
Absolutely.
If my research was right, GAO came out in December and said that the Federal Home Loan Banks are a reliable funding source for institutions of all sizes. Getting an independent scorekeeper like that to kind of give you the good housekeeping seal of approval, what did that do for business?
Well, I told the bank presidents and our system leaders, this was actually the second report GAO's done in recent years. I said, no one in the history of GAO reports has ever said, man, I cannot wait for that GAO report to come out. We might be the first because GAO does call balls and strikes. They're a fair arbiter. And, again, we hadn't been telling our story until the last 4 or 5 years. But when we told it to GAO and they validated it, what they came back with was a lot of statements that we would use in our advocacy material. And now we can say, according to GAO. And they did talk about the role we play as a reliable liquidity provider, how we help increase lending and particularly mortgage lending, the role that we play in times of stress. And we also had a lot of that validated by the Urban Institute that did 3 reports on us late last year, coming to many of the same conclusions. So when you've got multiple groups and multiple sets of researchers asking similar questions and getting the same answer, I mean, there's a lot of validation in that.
Yeah, that's amazing. Yeah, getting a good GAO report
Yeah,
is rare.
right. Absolutely. I think that we're in a position right now where we're continuing to launch a research pipeline to ask interesting questions about the system. So hopefully, in the months and years ahead, we'll continue to get that type of very positive and informative research and analysis.
Yeah, that's exciting. That's exciting. So one of the stats I wrote down here, it's gonna mean more to you when I say it than the cryptic way I wrote it down here. But so there's 11 federal home loan banks. I have a note here about 73,000 families being helped. Does that ring in any bells from the testimony? Just different projects where the banks are particularly, because credit unions have anecdotal stories, right? You know, when they go to Congress and they say, we have this small little credit union we have, and they got turned down by banks, and this is how we're able to help them start their business. Yeah, anecdotal stories of Federal Home Loan Bank helping people housing wise or however.
Yeah. No, the 73,000 is probably units, affordable housing units,
Okay.
supported in a year or perhaps even just by a particular bank.
Yeah, it was
One of
last year. That's right. Yep.
yeah. One of the things that we are required by law to do is set aside 10% of our previous year's net earnings and put it into what's called the affordable housing program. It's a government program that's run by the banks. So, it's got a very descriptive name. It does, it's exactly what it says it is. It helps affordable housing. For the last couple of years, the banks have contributed 50% more than what's required by law to, broadly speaking, affordable housing community development projects. It could be more money into the government AHP program or to voluntary programs. Now, here's where I'm getting to some numbers for you, Mark. Each of the last 2 years, that has resulted in more than $1 billion each year going to affordable housing. Now, before we made that commitment to do the extra 50%, we were already the nation's largest source of private capital support for affordable housing. And now we're doing even more, clearly in recognition of the severe crisis we have. But that gives us the impact to support projects across the country. And when we work with our members, with credit unions and other members at a local level, and our affordable housing advisory councils, we can target that support where it's needed the most or will have the most impact in each of the districts. So we're real proud of that effort and our ability to do that extra contribution.
And so the voluntary program versus the AHP, I think in your testimony, you may have pointed out some of the challenges of the AHP. Maybe there's some regulatory pieces that could be enhanced.
Yeah. So the HP is a government program. It's created by Congress. It's regulated by FHFA. It's very well intentioned, but as with many similar efforts, what starts in statute ends up in regulation, ends up in regulatory burden on the folks that have to ultimately implement it. AHP is touched by 13 different regulations from FHFA, 6 different advisory bulletins. What does this mean? It means it's complicated to apply for, which is problematic because you have to qualify and be among the best applicants to get the money. So that's complicated. We're often the last part of a large capital stack. We're a small part of it, but critical to getting jobs done. But we're all often in that capital stack. You'll have other sources of federal or state funding that has its own due diligence requirements. So we're adding on another layer of due diligence there. It could be a lot simpler. And to FHFA's credit and under Director Pulte's leadership, the agency is taking steps to overhaul the AHP program. That will make it a little bit easier, I think, to apply for, win, be awarded, easier for the banks to get the money out the door and provide and perform the oversight than it is today. What's cool about the voluntary programs is the banks create them based on the feedback they get from their members and their affordable housing advisory councils. They can put them into place relatively quickly and get the money out the door immediately. So one of the things that you may have an appreciation for this, when we talk about the funding, sometimes we get tripped up because with AHP, it's the amount that we've committed that will go out the door someday.
Right.
Where all the boxes are checked, versus with voluntary programs, it's the amount that we contributed, which is money that's been out the door that's having an impact in local communities. that flexibility, I think, is really critical. And one of the points that I made in my testimony is that if Congress is going to talk about or think about adjusting that 10% statutory floor, you can't crowd out the voluntary programs because those are the ones that are having localized impact. So it's I know that was a lot,
No,
but
that's
understanding the
flamboyant.
distinction between those programs and what we're trying to accomplish, I think, is really critical.
And am I interpreting it right? So the 10% is mandated. That has to go through the AHP is,
That's right.
and then anything on top of that is the voluntary, but
And
also the one
and
that's more flexible that you can get
right.
moving quicker.
Yeah, and voluntary could go through the AHP, but it doesn't have to. And what we've seen is over the last 3 or 4 years, the banks have created, more than 3 dozen different programs, again, based on their needs in local areas.
I know that I've got some friends and relatives in the rental property business, and I just
Mhm.
remember having discussions with them, and I think it's still the case. There's more houses and homes going out of being available than there are being built new, right? So they're the places that are dilapidated and need to be torn down.
Yeah.
Is that still
Yeah.
the battle we're fighting?
Yeah, I think it is in many areas, and that's why one of the things that voluntary program money can be used for is rehabilitation of those units, and again, another example of why it's critical to have some flexibility.
No, makes sense. That makes sense. I noticed a reference to the Federal Home Loan Bank
Interoperability.
interoperable. Try and say that without enough copy.
What I learned was at some of these hearings, there are these games on what word is going to be used, or
Right.
what things will be said. For us, it was cyclical and interoperability. Hard words to say, but things that are really important to what we.
You got it down. I could tell you practiced that a lot last week. So that committee, was it Jefferson and Bauman from both
Yeah.
sides of the aisle could set that up? Has that improved things?
Yeah, so this work really comes out of the lessons learned from March 2023, right? Where we had the Silicon Valley Bank failure, Signature Bank failure, and I think there were a number of lessons learned. But for the Fed and the Home Loan Bank system, it was really a lesson of, hey, we're already coordinating, but we need to do a little bit more. So for the home loan banks, what we've done is each of the banks has encouraged their members to develop a relationship with the discount window and test those lines periodically. That's a good best practice. We've also had discussions with the Fed on a number of work streams, improving communication, making sure that the personnel in critical positions at the Home Loan Bank and at the Fed know how to get a hold of each other, at 6 o'clock on a Friday. We've been working with them on master subordination agreements so that in a time of crisis, we can pull a document off the shelf and move collateral faster. Um, we've also proposed, the home loan banks have proposed, what if the Fed accepted a letter of credit from the home loan bank on behalf of one of our members in stress? We can do that very quickly. We can do that 24/7. Take that letter of credit. It will buy some time, maybe bridge from the market closing on a Friday to market opening on Monday, so that it gives the regulators a little bit more time to work things out. Again, all of this is making sure that we've got the right tools in the toolbox in times of stress, and we know how to use them. And the good news is that the conversations with the Fed have been very positive. Vice Chair Jefferson and Vice Chair Bowman have been integral, I think, into that leadership. But the thing that I have learned about both the Home Loan Bank system and the Federal Reserve System in the last several years is that neither are a monolith, right? So there are multiple levels and multiple groups at the Fed, and the same thing happens in the Home Loan Bank system, maybe to a little different extent. But it's really important that we're all pulling in the same direction, and I think we're starting to do that.
Boy, and two things that resonate: testing the system so that if something goes wrong, you're ready to rock and roll, and you know that the system works. But as you're talking about, making the contacts and all that, all I could think about was, NCUA had buyouts and lost about 27% of their staff. Federal home loan banks have turnover. The Fed has turnover. FDIC And you think about those call trees that you have where you pull out all the people's names. You try and call someone at NCUA right now, 27% of them are gone, right? So you better know who it is that you're supposed to call in the event of a Friday emergency for
Yeah,
liquidity.
there's no question about that. That you want to make sure that when the alarm bells ring and the trucks are ahead of the fire.
Yeah, yep, that's for sure.
So one thing, Mark, if I could just go a little bit further on the discount window, and one of the things that we also have tried to make clear with our members and in our testimony was that borrowing from the Fed and borrowing from the Home Loan Bank, um, very different, right? The Fed's got very limited lending authority, right? They lend overnight. There's limits on the number of consecutive days and the number of days within a 120-day period that a depository can borrow from the Fed. Whereas the Home Loan Bank is we're a daily liquidity provider to support the needs of the credit union, to make sure that they can continue to serve their members. And for us, where our nexus to housing is, it's really in the collateral that credit unions bring to the system. So it's mortgage related collateral, either mortgages that they've originated or bought, or mortgage-backed securities that they've invested in. That's our nexus to nexus to housing, and it gives us the ability to be a reliable lender to our members every day.
Yeah, it makes total sense. And again, going back to the signature and SVB and how you were able to help on a Friday to prevent, contagion. Yeah, exactly. Contagion. And then a note from the testimony, I believe, regulators treating advances like ordinary wholesale funding. How could things are going well, but how could things get even better in
Right.
that regard?
Well, so what this really gets at is the Home Loan Bank system has demonstrated, certainly in the last several decades, but probably throughout its history, that we are reliable, affordable, quick, and safe form of liquidity that a member can count on the Home Loan Bank system to get the liquidity they need. So what we're starting to talk to the regulators about, we had a conversation at FDIC. We'll have some conversations with the other regulators, including the new incoming chair of NCUA, is when you're looking at the liquidity coverage ratio and other other measures, and you're taking into consideration Home Loan Bank advances, that those should be treated as core liquidity for those purposes, just reflective of the reliability that we've seen throughout the history of the system.
Sure. No, that makes sense. And you mentioned the incoming NCUA chairman. Rumor has it that's going to happen next Monday or Tuesday. The episode we're recording will come out the following Monday or Tuesday. Again, that's rumor. I'm not sure if it's a good rumor or a bad rumor, but it is rumor.
I've heard the same, and there's reason to have confidence. So
there is reason. There's reason to have confidence. That's right. And so that what happens then is August, right? But NCUA doesn't have a board meeting every month. They used to just not have them in August, but they definitely don't have in August. But that's going to gear up you and your crew getting over there to meet the new chair and all that, and making sure they understand all the good things that the FHLBs do, right?
Yep. No, we're eager to connect. We had as part of our advocacy, we try to go to the top of the house at all of the member regulators, and certainly getting to know Mr. Cruz as he takes office will be important.
Yep, very much so. Yeah, he's gonna be drinking. I mean, he's a smart guy. You can tell that, and he knows a lot about the industry. But it's good. They got their budget coming up and all that, so it's good they got him in. Hopefully in August, so he can kind of get up to speed before all that hits him with the drinking water from a fire hose. Let's see, Chicago, Boston, and Cincinnati all run subsidized programs for CDFIs. How does that? Credit unions can take advantage of that as well, I presume.
Yeah, absolutely. So the CDFI membership is one of the smaller segments of our membership. Set aside the depository CDFIs, right? Yep. When we think about CDFIs as a membership class, we're really thinking about the non-depository CDFIs, and they face some obstacles that other members may not face, and one of them is the fact that the non-depositories don't have a prudential regulator, and the collateral that they bring, particularly the LIHTC collateral that they bring, is hard to value. And it's a shame that it's hard to value, because LIHTC collateral is pretty reliable collateral because no one sells it, right? So the issue is it's hard to value. So as a result, the haircuts that are often applied to CDFIs are a little bit steeper than to other members, which is why these programs are important, to try to provide a more, access on a more parity basis for CDFIs.
And LIHTC, could you describe that?
Yeah, low income housing tax credit. It's
Okay.
the provision of the tax code that really sort of incentivizes investment into to affordable housing in low income areas.
Got it. Got it. HR 7647.
The Mint
Would-
Act.
Yeah. So that would add credit unions to the community
Oh,
finance.
no, yeah. The credit unions to the CFI definition. Listen, this is an area in, we are required, by law to treat all of our members, pretty much the same. This is an area where Congress has created sort of an exception to that for community financial institutions. And when they did that, they defined a community financial institution as a community bank under, I think at the time it was $1 billion. What the legislation would do, I think, is it would add credit unions to that definition. Our view on these matters has always been that's a decision for Congress to make.
Absolutely.
And that, if they're going to make a change, they should also consider increasing the threshold to 10 billion. But ultimately, we're gonna follow whatever law that Congress.
The playbook Congress gives you is who you will serve.
Well, I think it's not much different than a credit union, right? I mean, this is really the wonderful thing that I've really enjoyed over the last 4 years, is that there isn't much difference between a Federal Home Loan Bank and a credit union. They're both federally chartered. They operate with, limited powers, limited field of membership, who they can serve, what they can do. Congress has really set up a box, and the responsibility, I think, for both is how can you have the biggest impact operating within that box, right? And that's what we try to do.
Yep. No, that makes perfect sense. Any other takeaways from the hearing that you want to highlight?
There were several moments in the hearing that stand out to me. I had I think a pretty positive exchange with Representative Pressley from Massachusetts. And it's stuck in my head because of a statistic that she shared, which was in her district, which includes, many of the prestigious universities in Boston, including MIT. If you go just 3 miles away from MIT, the life expectancy drops 30 years.
Wow.
And that blew me away in the hearing. And her question really got to what can we do to get CDFIs more in the game and leveraging the Home Loan Bank membership to a greater extent. We've explored a couple of solutions. As you mentioned, three programs that banks are running. In the last administration, we suggested using the CDFI bond guarantee fund to help guarantee advances to CDFIs as one solution. They didn't take us up on that. We'd like to work more closely with FHFA to get better supervisory guidance on LIHTC valuation, so we can do more there. The home loan banks are committed to serving their CDFI members to address issues like the ones that were raised at the hearing, but there's some things that the government needs to do, I think, to facilitate that. And we work with the CDFI community on that. The other moment that stands out really has to do with a class of our membership that, some people might think, well, why are they involved in this? The insurance companies. And the hearing gave us the opportunity to reinforce that, listen, every member that's coming to the Home Loan Bank for advances is bringing with them housing-related assets, whether whole mortgages or mortgage-backed securities that they either originated or bought or invest in. And that's the nexus to collateral. And for insurance companies, they're some of the largest purchasers of whole loans and MBS in the country, and they help keep those markets liquid. And that's important because that provides scale, not just to the home loan banking system, but also to those markets in general, which is helpful because scale helps bring the cost down for everybody. So being able to reinforce that was really critical as well.
That's great.
No, it was a great opportunity. The joke at the end of the hearing was, "We'll see you in 15 years." I hope it's not that long. We need to keep an understanding of home loan banks, front and center, and that's why I appreciate being on your podcast to elevate this to credit unions' attention.
You got it. Yeah, I always enjoy touching base with you, see what's going on, and as always, I learned a few things, and the timing is great because you just had to cram for that big test last
That's
week,
right.
and
I got it all in here. I just have to get it out.
yeah, exactly. So, Ryan, I want to thank you. If someone wants to reach out to you, your organization, what's the best way for them to do that?
So both the council and I are both very active on LinkedIn. So Council of Federal Home Loan Banks and Ryan Donovan on LinkedIn, and that's a great way to get in touch with us. And that's probably the easiest way. You'll get all the information that we're putting out, and it's a good way to connect.
Awesome. All right. Thanks so much, Ryan. And listeners, watchers, thanks for listening or watching. I hope you'll do the same again soon. This is Mark Treichel signing off with flying colors.